Hello, everyone. I'm Heidi Pickett with the TIE, and welcome to the TIE Innovator webinar series with Tim, Global Head of Strategy at Mantle, Rob, CEO of zkVerify, and Ryo, Representative Director at Oasys. Today, we're going to be exploring what it will take to bring the next billion users into crypto. While institutional adoption has gained momentum in recent years, retail adoption presents a different set of challenges and opportunities. And over the course of our panel discussion, we'll dive into the key barriers to mainstream adoption, such as user experience, scalability, cost, privacy. We'll also look at potential key infrastructure improvements that can make crypto more intuitive and accessible for everyday users. Just a quick note before we begin, the information contained in this webinar is for informational purposes only and is not intended as investment advice. Okay, let's kick it off. For the benefit of our listeners, could each of you introduce your respective organizations? Let's start with you, Rob.
Happy to, Heidi. Thanks for having me. I'm Rob Viglione, the CEO of a company called Horizon Labs, that also the founder of zkVerify. So I'm an early Bitcoiner. I have a PhD in finance, and I would say the other interesting thing is right now we're tackling one of the biggest problems that we see in a post-AI world with zkVerify, which is trust. Right? So I think trust is going to be a big part of this narrative that we talk about today.
And Tim?
Everyone, my name is Tim. I lead global strategy over at Mantle. Start out as an L2, but I've built a host of suite of different products from METH to Function BTC. Both are sitting at billion plus TVL. And so we're building a lot in towards this angle of on-chain banking and moving financial services on-chain and transforming Mantle into the banking chain.
Which we'll get more into in a little bit. Ryo, how about you?
Hi, my name is Rio from Oasys chain, Oasys the blockchain. So we are in a kind of gaming company backed, blockchain. So we're in this space since 2018, but when we see our kind of Uniswap, we thought this is a game. Then we started to think, oh, we should involve the gaming guys because in the future the Web3 game would be totally different from the existing gaming space. Then someone should be the bridge. Then so we started in the gaming chain as a bridge between Web3 and Web2. Yeah.
Nice. Let's just set the current stage for what does adoption look like for sort of the retail side. I would say over the past year, particularly with the Bitcoin and Ethereum ETF launches, institutional adoption has sort of taken center stage, at least as the primary or at least a significant driver of crypto growth, while retail adoption appears to have taken more of a backseat. I don't know. First, do you agree with that observation? And if so, what are you doing? How's your platform working to address the needs of the retail users alongside institutions? And I'll open it up to all of you or whoever wants to go first.
Sure, I can jump in. So I think you're right in that right now it's taking a backseat, but I think we're just in a local minima on retail activity. Part of that, with the backdrop of macro, et cetera. So retail generally have lower time preferences, right? Whereas institutions, once they've seen retail prove out that there are use cases and activity and there are room to monetize, they've come in now, right? We saw that type of ethos and zeitgeist or ETH Denver, where there was much more influence and interest from institutions also at DAS versus the retail sentiment. So then the question is, what are we doing over at Mantle to enable the next billion number of users to come into crypto? Well, first, I think we split into two ways. One is on the TradFi side. How do we bring more TradFi dollars into crypto? The second is more on the crypto user side in terms of how do we bring more retail into crypto. So on the TradFi side, we think RWAs today is an interesting narrative, but it's misplaced. It's misplaced in the sense that everyone is trying to build these chains and bringing on projects that are yielding, I don't know, high single digit that are just, REITs in the Midwest US. It just makes no sense to bring them on chain because we don't see the real demand there. What really matters, in our opinion, is you look at where the dollars are today off chain in TradFi. That's in the Bitcoin ETF, for example, is 100 billion. I don't know where it is today. And so the question is, okay, if there's appetite there, what do they want next, right? How do we build a more innovative product and service the needs of those guys. So we recently launched in the product to get you broad exposure with beta. Separately on the user side, I think the biggest question that we wrestle with as an industry, and it's a lot of around, is that there's no real world utility, right? No real world products being built. And I think what's interesting here is we believe that the real world product outside of trading is building something that enables the intersection of DeFi and TradFi, and that is the retail banking, a crypto neobank, if you will. And that's another product that I can share more about later.
Mm-hmm. Yeah, I mean, I'll just jump in here and say that I think the delineation between retail and institutional it is real. It's big. I think on the retail side, it's very cyclical and trend oriented. But I do think that on the institutional side, the big difference now, so you've seen kind of escalating institutional adoption, primarily with crypto as an asset class. And you see these kind of capital markets focused products that are hitting the market and have been hitting the market. But I think now the big difference is at least a perceived, but probably real major difference in regulatory shift within the United States. So now it's crypto is okay. And I think it's more than okay. I think people realize it's time to get in. And what we focus on with zkVerify is what are those things that would actually make institutions getting on chain feasible and make them really want to do it in a safe, secure way. I think privacy and just security are absolutely critical there. So as institutions bring assets on chain, as they start engaging in more on-chain behavior, they're not going to want all of that on-chain behavior, much like their existing TradFi interactions, to be just visible to the world, especially broadcast to the world before they execute, I think is not what they want. So I think the tools that we have, like zero knowledge cryptography, privacy, these are really going to come to the forefront.
Raya, do you have anything to add, from the blockchain perspective? Maybe you're seeing more retail over institutional adoption?
Yeah, but basically, I agree. The opinion in the institutional the money for Bitcoin or Ethereum ETF increase, the kind of volume of trade volume to or even for the retail, or that was the largest, how can I say, impact last year 2024. But after that, the Solana became really huge because they made the kind of retail or demand buy kind of how can I say, the maker of this kind of meme coin. So I think the retail are the kind of demand creating the retail demand also, how can I say, attract institutional investors are kind of the buying pressure. I think so we also should create more than the meme coin or retail demand. That's gonna, how can I say, attract more or institutional or buying pressure, I believe. Yeah, that's why we were working on.
Yeah, great. Let's maybe talk about adoption and some of the growth drivers. So Tim, you alluded to TBL earlier, and we've seen some pretty impressive growth over the past year. What do you believe is driving this growth? Is it primarily coming from the institutional side or retail, or what are you seeing?
Yeah, it's hard to discern. But at least for us, a lot of what we did over the last year or so was a lot of low-hanging things we haven't gotten around, right? Anything from additional listings to, as I mentioned, we incubated a couple of products, right? One is AM ETH, so our version of staked and restaked ETH, and we were offering additional yield on top that was way above market rates. And we're able to do that because we have the privilege of sitting on a multi-billion-dollar community-owned treasury, in which we can then better direct incentives and rewards for folks who buy in AM ETH and stake to CM ETH on the Mantle chain. And so that drove a lot of adoption. And so, but the question is more around the bigger question is more about how do we make it sticky, right? And so this yield is a hook, and how do we keep them there? And that's what we're focusing on now, in building additional products, deeper hooks to get people to stay. So that's the biggest roadmap priorities for us going forward.
Makes sense. And Rio, Partnerships, particularly with like major gaming players, has helped grow the Oasys ecosystem. What do you see and how do you quantify the tangible impacts these collaborations have had, particularly on user engagement?
Now that's still in the midway, because we did bringing the gaming giant to this space. We involved Square Enix, Sega, Bandai, Ubisoft, Netmarble, the most of the gaming giant from the world as our validator. We made them to hold the crypto or our token. Then next last year, most of them launched a game, but still that's a Web2 centric game. They just added an NFT or FT, Web2 element to existing Web2 games. But next phase is make them to really Web3 centric game, like coin centric or token centric game. So that's still in the midway. But ultimately, if we find kind of the formula of the successful formula of the Web3 game, they're just gonna add kind of with their real, I'm gonna say, strong IP to the successful Web3. So that's it. Even though it's still in the midway, I think that will be really that will be essential or for or mass adoption of the Web3 in the future. But so now from this year, we should make them to launch an IP token game. So that's going to help our ecosystem, I believe.
Nice. And then Rob, in terms of sort of with the growing demand for true transparency in the digital world, how does zkVerify ensure the integrity and validity of its proofs in a way that benefits everyday users?
Yeah, so and maybe just taking a step back, what is zkVerify? So zkVerify is a universal verification layer for cryptographic proofs, right? So like it sounds very esoteric or abstract, but the reality is all of our digital lives involve cryptography, whether it's kind of a secure handshake from your bank server to your web browser, or in our world of Web3, we're talking about generating proofs that could encapsulate financial information, right, and then do things with it. So what we're doing is we're providing this public layer where anyone can generate a proof on any type of execution, whether it's AI execution, whether it's private data, financial information, and so forth. And we're a one-stop shop to verify that information and make it useful for applications, a wide variety of applications. So for us, like one thing that we see for kind of how we're contributing to the next billion users coming into crypto, we take our perspective that, like, and maybe this is me personally, is I think one of the biggest innovations that we have is decentralizing finance. And it's not going to be that, from my perspective, all of finance or even all of Web2 is going to come into Web3. It doesn't have to, it probably won't, but there will be certain things out there, like the ability to decentralize or disintermediate certain financial transactions, make them truly global, and endow individuals kind of ownership of their own accounts so that they can do what they want with it. These are really big paradigm shifts. And for us, like, our thing isn't necessarily the billion users. We're sort of infrastructure layer, like I mentioned, this public layer. So what we want to do is to lay the rails and the foundations so that you can get the off-chain information on-chain to do useful things. Now, one of the most interesting kind of technology innovations or products that are out there that we see is something called ZKTLS. So the idea of TLS is like the secure handshake, again, like you have from your browser to your bank's router, right? And to be able to say that, yes, my bank served me this information in a secure way. And to take that, generate a cryptographic snapshot of the information. It could be time series of my bank statements. It could be that I have a net worth greater than a certain amount. The fact that I pay my bills on time, always, and getting this information securely encrypted, privacy preserving on chain to do things like maybe reduce my collateral ratios for a DeFi loan, right? So there's this kind of like value chain of things that have to be enabled to get ultimately to the type of world that Tim's talking about with Mantle, and the kind of providing like this like big global environment for people to house capital liquidity on chain and then to do interesting things with it.
Yeah, interesting. And, sort of continuing on this theme and sort of around the adoption side and sort of user experience and accessibility. So, I think one of the biggest hurdles to mainstream crypto adoption is just the complexity of the crypto or user experience, whether it's like selecting networks, wallets, et cetera, et cetera. So, how does zkVerify's approach to interoperability help bridge this gap and bring crypto closer to sort of the seamless experience that I think we all want and need for this to be successful?
I think that anyone here would probably agree that we just need things to be easy, right? So easy, interoperable, streamlined, these are those kind of buzzwords that really matter, and you have to build into practice. So the way we do it, there's this kind of, in our chunk of the cryptography world, there's something called zero knowledge proofs, ZKPs. There's a value chain to that. You need to generate a proof, you can aggregate proofs, and ultimately you have to verify proofs. And the way that the world works kind of pre-zkVerify is a product needs to choose what piece of Web3 infrastructure do you want to launch your product on. Is it going to be Ethereum? Is it going to be Arbitrum? Is it going to be Solana and so forth? Then you need to deploy a cryptographic verifier onto that piece of infrastructure that you want it to operate on. You need to maintain that, make sure it's bug proof, make sure it's constantly updated over time. And then if you want your product to work across multiple ecosystems, you need to replicate this process piecemeal across every single ecosystem and deploy all these verifiers, maintain all the verifiers. They're maybe not all written in this programming language and so forth. We're building a one-stop shop for verification. So literally expose our system to an RPC interface, and developers can just in one fell swoop just submit your proofs for your application here. We verify them faster, cheaper than anyone else could do. And then we send the results anywhere and everywhere that your product needs them. Now, this is just kind of like a design principle that probably all of Web3 will operate with one day, where we think in terms of services instead of kind of siloed infrastructure. But we're doing this specifically for the world of cryptography in Web3.
Tim, I think it's a good place for you to maybe talk about interesting thing that you're building. I think you recently sent a note to all of your token holders, talking about sort of this missing layer that's unifying between sort of TradFi, DeFi. Can you share more about what you think is missing and what are you doing to solve this problem or address this problem?
Yeah, absolutely. I think maybe to contextualize, our genesis is as a DAO, and what that really means is I think we're the only chain to publicly communicate both what we're working on, our revenues, expenses, and so we're operating almost like a public company. And as part of that, we wanted to address our token holders exactly what we are working on. And as you pointed out, one of the key focuses this year is this crypto neobank. So why is this important, right? Today, I think there exist two worlds. And as Rob pointed out, it's extremely complex to operate in the world of DeFi. So today, for example, you get your fiat paid to your salary paid in fiat to your bank account, sits here. Maybe you find a way to bridge over to a brokerage account. And then from there, you go into wallets, you play in the fun and dangerous world of DeFi. And those two worlds don't really coexist. And there's a lot of hand-holding and operations work for them to coexist. So that's the world we live in today. Now, if you separate this world again a bit more for everyone outside of the US, the biggest challenge is on and off ramping, because there's a lot of risk with potentially getting debanked and really just finding ways to move, let's say, stable coins into fiat. Less of a case in the West, but in the West, it's more this pain of managing two different accounts. And so for us, we're thinking, okay, well, let's take a step back. What exactly is the answer here, right? So we believe the unifying layer actually is a all-in-one account where your fiat sits seamlessly with crypto. So just like what Windows operating system did with personal computing in the 90s in unifying your ability to play with different applications via the Windows operating system, what Apple did in enabling mobile apps through the form factor of a phone, we believe that stage of meshing DeFi with TradFi is through an account where you can see your fiat salary and crypto. So the easy layman's example then is imagine a world where on a monthly basis, you get paid your fiat salary to this account. And based on your risk preferences you might have set before, that let's say it just kind of dollarized, it will be tokenized. And then based on your preferences, maybe 10% go into yield from Athena, 30 or 40% go into, let's say, this crypto index fund we're building. Another 20% go into higher risk, higher yielding assets. But you get to see them side by side. So what we're doing is abstracting away all the complexity of DeFi, and all you see is just the yield that auto compounds on your earnings. So that's kind of the UI UX challenge we have ahead of us. And where does Mantle fit into this is, well, we're building everything down the stack, right? That's where we're the banking chain. If you want applications such as, the index fund, or maybe it's gaming from Rio's side, right? Maybe there's games we can tap into in-game wallets. And then all the way down to the liquidity layer between METH and FBTC. Folks who hold METH can post it as collateral to borrow against it and use, let's say, a zkVerify to say, hey, this is in fact, this is in fact the collateral, and this is how I will use it to borrow credit. So all of that is neatly packed in one type of ecosystem product. And we believe that is the go-to-market to really onboard the next billion users.
Tim, did we just announce a Mantle zkVerify partnership?
We'll chat offline about it.
Love it.
Real too.
Amazing. I love it when that happens on these webinars. Tim, just a quick follow-up question. What role does your either token holders or just ecosystem have in terms of helping advise on what this end state looks like for Mantle banking, so that you're ensuring that what you're building is actually what will be user-friendly and easily adopted?
It's a great question. I think from the Web3 ethos, right, it's a governance token. The Web2 ethos is, well, look, let's just be real here. Everyone espouses all these notions of decentralization, all these things, but that goes out the window when faced with, I just want actually a convenient product that people that we can trust and we can actually work with. And so, without disclosing too much, we actually, unlike a lot of the other DeFi mullets and other products out there that are just self-custodial wallets with a MasterCard, Visa, we actually have deep partnerships with the missing layer in the middle, which is a bank account. And so sitting at that level also adds an additional sense of confidence and trust. And so what we are going for is secure, convenient, and seamless in experience.
Got it. And Rio, bringing you into this conversation, there was a decision by Oasys to implement zero gas fees. So what was the impetus behind this strategy, and how does it enhance, or has it enhanced the adoption, particularly in the gaming space?
Yeah. Till last year, we didn't need the zero gas fee environment, but from this year, we need that, because the real, Web3 game adoption has just started, because, or recently the new Web3 gaming trend has started. Like I said, real blockchain game, like the recently Bitcoin has been popular, or it's a mining game. It's literally blockchain game. It's a mining game. So the blockchain game is token. It should be focused on token and kind of blockchain, including the contract, smart contract. Think then asset, on-chain asset. I think it should be on layer 1. Then, but for on-chain logic, should be layer 2, because for taking the gas fee for the on-chain logic, gaming logic doesn't make sense. I think it might help the adoption of the real blockchain game, or like for example, so we are Oasys. The names comes from the Ready Player One. Or imagine that, remember that in the stage 1, the kind of player who ran backwards, won, then made the rewards. They won the the first prize, right? So if the gaming logic was back in running backwards, it should be on chain, the gaming logic itself. But it's like I think those kind of really on chain game or real blockchain game for data adoption, zero gas fee will be important. I think that this involvement will be required for kind of real adoption of the blockchain game. Yeah.
And yeah, thank you for that. And, maybe we'll, dive a little bit deeper into sort of privacy and security. And so zkVerify focused on trustless verification and, touched upon this a little bit, but Rob, how does verification infrastructure contribute to building user trust? And why is that essential for mainstream adoption? And I mean, does it differ from what institutions need?
So I think it's exactly what institutions should be participating in, because so what we're trying to do is we have this trustless layer where we are just the world's experts at zero knowledge proof cryptography, right? So we're always maintaining kind of best in class, verifiers. We're making sure that we're just investing an immense amount of resources into security and so forth, and then acting as an independent third party that doesn't have any skin in any particular application's game. So there's a difference if you're providing some sort of like financial application to kind of end users or customers, and they need to trust you for everything, right? And in many cases, from an applications, it's completely fine. But especially when you're dealing with kind of parties that might be anonymous or private themselves, right? You probably want third party involvement there. That's not going to work for institutions. But if you're dealing across multiple users, across multiple organizations that don't necessarily inherently trust each other, maybe they're competitors with each other, but they need to share information in a standardized way. This could be like an identity product. This could be some sort of like DeFi primitive that we're all composably using together. It really helps to have a third party providing the verification for the types of data that flows across that network, and to do it in a privacy preserving way, because again, like institutions are not going to want to give away all of their information flows or private transaction flows, especially before they've been executed, right? Like we all know what front running is, we all know what NEV is, like in Ethereum, right? And the ability to obfuscate those transactions, but still to make them extremely useful and available for the world to actually integrate into the applications, it's critical. That's what we do. We think it's just kind of a key thing, because like ultimately, like we talked about 1 billion users on this platform, on this conversation, but we believe in a trillion proof world where every single piece of hardware, every single application device, every single transaction, every single like email, every single like authenticated access to an application is going to be generating a cryptographic proof. And especially in a post-AI world, we think the cryptographic proofs are just a key kind of security rail for information. All of these proofs need a place to be, like efficiently verified. And for many applications, they benefit just from this like kind of trustless third-party verification approach.
So way more than a sort of billion onboarded, but
well, we deal in proof volume, more so than users. So, users are for Oasys and Mantle, right?
Yeah. Tim, how is Mantle approaching privacy? And do you see features like ZK proofs, encrypted transactions helping make blockchain more appealing to everyday users?
Yeah, so on the Mantle network itself, we do use ZK, but I don't want to get in the weeds because users, it should be so abstracted away they don't even understand what's underneath the hood, right? I talked a bit about the bank earlier, but I want to talk about privacy, or when it comes to the TradFi products we're building. And so for us, part of it is, again, coming back to the crypto ethos of espousing decentralization and espousing all these tenets of not anonymity, but privacy, fine. But if you want to onboard the next billion users or next billion, let's say $1 trillion, right? We're talking about TradFi, that sits in TradFi rails today. Those tenets need to be deprioritized a little bit, right? Because you need to play the game that these guys are comfortable with to get them on board. And that just really means, okay, let's build a walled garden, verify so they can that they can operate within, right? That there's whitelisted addresses and things like that. And so for our TradFi facing products, not only are we building it in that manner, we are also structuring it not so much as an on-chain vault, which is very DeFi native. It has a lot, smart contract risk as opposed to just counterparty risk. And those are not familiar, and not it'll be hard to get any IC to underwrite against that if you're a TradFi institution. And so we went the TradFi route, and we're building these products as if they are TradFi products today, right? Whether they are fund structure, trust structure. So then, it looks like, it talks like, it walks like a duck. So for the IC, all they know is, this is the structure we're familiar with, but instead it's holding these assets, or the strategy looks like this. And so that's how we are thinking about privacy when it comes to enabling TradFi adoption.
Thank you for that. And Rio, how does, is privacy important to gamers in the blockchain space? And, what is your approach? What is Oasys' approach in terms of implementing ZK proofs or other technology?
So even for kind of retail products like the gaming, the privacy might be really important because, and especially in the AI era, I think we need the ZK because our personalized UX or CX for each individual customer will become the norm. I think. So I think the AI plus blockchain based identity management might be required. If the AI advanced, think that will be required because we need a privacy for how can I say personalized in the UX and the CC customer experience. Definitely. Yeah. So that will be very important for even for the gamer. I think. Yeah.
Hey, Heidi, can I just add one kind of like go back here that I think is important is we're not just talking privacy, like we're talking regulatory compliant privacy, right? And there's a big difference there. So it's really the intersection of integrating like an AML KYC process with a unique identification solution, like a ZKID or some sort of other DID product with DeFi, with this intersection of DeFi and TradFi. That's what we're seeing from some of our customers are some of the more interesting use cases. Like we're not looking to build the next Tornado Cash, but we are looking to enable kind of these like walled gardens, kind of like Tim was talking about, like walled gardens, like within the platform. But like we can do this in a very seamless way where we just intersect two different pieces of technology from like the AML KYC solution with DeFi, and all of a sudden we have this kind of like automated way of participating in DeFi that ensures that people are kind of regulatory compliant.
Yeah,
I'm oversimplifying, obviously.
Yeah, no, thank you for adding that. I think that's important. As you think about, or maybe you can share sort of what should we look forward to seeing from each of your organizations over, the next, 6 months or remainder of 2025? What does your roadmap look like? I know we can start with you, Tim, and you've already shared a little bit about this in terms of Mantle banking and such, but from an institutional as well as a everyday user, what should we be looking to see and hear about?
Yeah, so for us, again, coming back to the Ledger token holders, we do these every quarter. And so again, the way we hold ourselves accountable from an operational perspective and cadence is really like a public company. We'll share in advance what's on the roadmap, what's coming, what's the latest update on a quarterly basis. Again, the two new products that we're super excited about that's upcoming this year really are this crypto neobank product and this TradFi index type product to onboard both stakeholders into crypto.
Rob?
Yeah, I mean, easy. We're going to launch. So I mean, everything we're talking about here, right? I mean, we have our customer CRM pipeline like on our testnet, which is great. But I mean, going from testnet to production is going to be the next big and important leap forward for us. And then, like, if you look at how we hold ourselves accountable with OKRs, it's all about kind of throughput and efficiency from there. So, and then also like making life just way easier for our customers. So like one thing that we're doing is kind of rolling out a B2B product to complement zkVerify. So we just abstract away the crypto experience. I mean, like we're not in the business of wanting our users to even know what crypto is. Right? I mean, literally, we just want you to use this as a public, independent, trusted layer for cryptography, right? And like not to have to worry about having multiple wallets and dealing with cryptocurrencies and so forth.
Nice. And Rio, how about
if I may? Sorry, if I may add. Maybe to contextualize in layman's term again, we are doing our jobs correctly. This would be a very aggressive timeline. If by the end of year, for people who are already crypto initiated, to be able to buy and stake BTC and ETH, right, into our crypto neobank, they're earning yield on it natively, from which they can directly spend as credit or against their outstanding credit. So it's a seamless ecosystem where that blends crypto, yield, and then offline spending.
By the end of this year?
That would be an aggressive timeline. I'm not saying that, but like in an ideal world, yes. But
in an ideal world,
we're chipping at it.
Yeah, sounds good. And how about from the Oasys front, Rio? What should we expect, or what we should be look forward to?
Yeah, so now we are working two things. Now we are working on the one rebuilding the value of the crypto, or because after Pam.fan, the kind of altcoin value has clashed, has been clashed, because the value of the most of the crypto assets was made from kind of high liquidity, or using derivatives, or kind of using derivatives and hypes. That was a kind of source of the value of the crypto before, but now it's crashed. I think we should absorb the value from the real world. So we're gonna tokenize the Asian asset, especially from Japan, including IP or kind of real asset from Japan, or even not only from Japan, but we're gonna start from Japan because I'm based in Tokyo. I'm now based in I'm from Japan, and also we will focus on the kind of involving the major IP into the crypto gaming space. Not as Web 2.5 game, the real blockchain game, or yeah. So that's the main to focus on this year. Yeah.
Nice. And maybe to close this out, so if we are to fast forward, I don't know, 1 year, 2 years, pick your time period, what major milestone or milestones would signal that we're truly on the path to onboarding the next billion users? And I know we've talked about seamless experience, so that we can't bring that into play, but yeah, you can. But I don't know, in your opinion, respective to what you're doing, or even just broader sense of adoption, how will we know we're actually getting there and making forward moving progress?
For us, it would be our crypto neobank is, I don't know, top 3 in the App Store. Yeah.
Yeah, I mean, like, and not even saying necessarily for us, but like, I do think you have a great cross section here of projects, because you've got gaming project, you've got banking, right? And these are probably literally the 2 biggest growth areas for like crypto adoption. So I think it's a really nice kind of construction of the panel. But for us, like, it's really about proof volume. So like, we're looking at like, are we actually able to generate cryptographic proofs of useful information and bring that on chain? Again, I keep going back to that, but as soon as we can actually, or when we can securely get your bank information on chain to do interesting things, whether that's in a game participating, or whether that's like on like a banking platform, I think that's the winning recipe here.
From gaming side, we need Angry Bird, Web3 version of the Angry Bird for mass adoption, because even for mobile gaming, a lot of the famous game try to how can I say, bring the famous game title onto web and mobile, but it didn't succeed. So like the kind of vertical, or the thumb you how can I say, thumb action game, or made a success, or things or kind of social experience using the gacha. So those kind of invention we need for Web3 game. So then, and after we find that, so we also part of the IP will help the mass adoption. That's what we are currently looking how can I say, trying to make maybe invention the next gachas things. Yeah.
Amazing. Thank you, Rio, Rob, Tim, so much for sharing what is going on in each of your respective organizations. Tremendous opportunities ahead, and definitely, I for one am I'm excited to stay apprised of what's happening and to see further adoption in our industry. So with that wraps another TIE Innovators webinar. Thank you to all our listeners for joining in. And if you want to hear about more events and webinars in the future, please follow the TIE on LinkedIn and X, and we'll see you next time. Thank you.